Here we have the 4-hour price chart for NIO Incorporated, stock ticker NIO. So here we can see that the stock has actually posted some very strong upward movements here on a short-term basis, on the shorter-term timeframes. If we do pull out a bit here to the longer-term timeframes, it might not seem as significant. But if we really drill into this price chart here, we can see that the stock is starting to form a base at these lower levels. And this will be critical for the stock going forward. So specifically, we're going to look at some specific price zones here and explain these price zones so that investors can sort of turn around the trading scenarios here that have been taking place for the stock for quite a while. And we can start to establish some new strong bullish positions that actually allow us to profit from these trades. So from a longer term basis, this is a stock that has really taken a deep dive here. There have been many YouTube influencers, particularly there's this guy, Meet Kevin, who sort of inspired a lot of people to buy this stock right around the time of the IPO, which was probably the worst possible time anybody could have purchased this stock. So, people like that, people with, quote unquote influencers like that really don't have much experience trading the market and they have a really bad track record as far as identifying profitable trades. So here, what we can see, if we're actually looking at the real price charts themselves, we can identify some important levels here that can be used for real-time trades. So specifically, what we're looking at is a share price that has now broken back above the $3.90 level. This level is critically important because we are looking at a 4-hour price chart here, and this does show that the stock has now broken above its 20-period exponential moving average. So this is quite significant because it does mean that we will now be able to move back into the moving average cluster, which would be these lines here. And then this will allow us to start taking some of the pressure off of the top side off of the downside for this stock. So moving out, we can see that, this does break a prior resistance zone and it does allow us to move back into the exponential moving averages. In addition to that, if we really start to pull out here, we are coming right back into contact with this descending triangle pattern that we have been watching for the stock now for quite some time. In my view, this is the ultimate question of whether or not this stock is going to be able to turn around from these lower levels. What really needs to happen at this point from the bullish side of the argument is that the share price itself needs to convincingly break above this downtrend line here, this descending downtrend line, which has been in place now for quite a while. Anybody that's been watching my videos knows that we have seen several instances where the stock has been pressuring this downtrend level from the top, from below, and we've even seen breaks to the top side within the share prices themselves. So I can point to a couple of examples here. We did see an upside break here. This would be roughly July 11. A couple of days later, roughly July 15. We did see another breakdown here, roughly July 30th. So we have not really seen a weekly closes above these areas. And this is really the real problem here. And this is why the stock has not been able to gain much traction. But as we can see here, we're continuing to pressure the top side. And this really wasn't happening initially. We did see two kind of initial tests of this downtrend line, but then there was a long period of time here before anything else like that happened. And now in the span of a very short period of time, we're talking about less than a month here. We're talking about just a few weeks. We've seen several pressurings here to the top side where this descending triangle pattern has come under a significant amount of pressure. So we can use this information to show that the tide is starting to turn here. It might not look like it, especially when you're dealing with continued price movements to the downside. We have now seen support levels fall all the way to the $3.63 mark. This does put us within very close proximity to the $3.61 support zone, which was formed during the April 22 trading session. This is a price level that we have also been watching for quite a while. As we can see here, share prices are starting to base in anticipation of that support zone. So that's very important because it does mean that the market is starting to buy the stock into these areas. And it does suggest that the potential for further downside is really becoming limited at this point. I can understand that for people that it might not feel that way, but in many cases, people like to say things like it's darkest before the dawn and all that stuff. I try not to get overly optimistic here, but when things tend to look the worst, those tend to be the best buying opportunities as well. So what we're starting to see here is the stock is attempting to base, and the stock is attempting to break out of this descending triangle pattern. I find a very hard time, believing this. And if anybody really disagrees with that, I would like to hear some comments in the comment section below, which explain why this descending triangle pattern is not coming under pressure. I mean, you could make the argument that we're now seeing some lower lows here. We did break below support at this $4.15 level, and that was a significant break to the downside. I will fully admit that. But when we're looking at the broader picture here, declines here have been fairly minimal, especially when we consider the fact that most of the market has been experiencing selling pressure during this period of time. We're talking about major stocks here. We're talking about Microsoft, Nvidia, Apple. We're talking about the biggest stocks in the market, and those stocks have seen much bigger declines. And if you compare this price chart to the Tesla price chart, there are some very stark differences there. Look at the declines that occurred with Tesla stock, and then compare those declines to what we're seeing in this chart. Because we're really only seeing declines here of about $1. It's really not a huge price movement. So if this continues, if this trend movement continues, and we do start to see, a basing here at these lower levels, right around this $3.60 mark, which is a prior zone of support, we could continue to see the stock move into this exponential moving average cluster. Personally, what I would really like to see is for these moving averages to start to base and then start to slope in the upward direction. One aspect of this chart that would concern me would be the fact that these moving averages are still sloping downward, and this does suggest that the broader trend here is still trying to push lower in some aspects of the price chart. But with all that in mind, we also have to take into consideration the fact that the stock is now rolling over out of oversold territory. So as we can see here during the August 7 trading session, the stock did enter into oversold territory as these 363 price lows were forming. So this is significant because the stock did manage to then roll over out of this territory, and the relative strength index, if I zoom in here, you can see the purple line crossing above the yellow line, which means that the relative strength index is crossing above its own exponential moving average. This is the momentum indicator. So we can point to these downward trending moving averages as evidence of negative momentum, but you also have to point to these readings in the relative strength index, which suggests that the stock is basing after falling into oversold levels. So when you combine the indicator reading with the fact that the stock is also trying to base near this prior support zone at $3.60, I think you still have a fairly convincing argument here that the stock is attempting to form a base. So here's the current market analysis for NIO Incorporated, stock ticker NIO. Our high value trading strategies membership is currently available for a limited time for only $9.99 per month. These high conviction investment strategies are characterized by superior risk to reward metrics that target massive market beating returns over time. Join now to outperform the market. Lock in this special introductory rate of just $9.99 per month for the entire lifetime of your membership and start trading stocks with the pros.